In a stunning reversal that has shaken financial markets and everyday Americans alike, the robust economic expansion seen during President Donald Trump's second term has come to an abrupt halt. Just weeks into 2026, escalating military conflict with Iran has triggered a cascade of disruptions, sending oil prices soaring, inflation ticking upward, and growth forecasts plummeting. What was once hailed as a golden age of prosperity under Trump's policies now faces its gravest test, with experts warning that prolonged hostilities could tip the U.S. into a recession. This development marks a sharp pivot from the steady gains of 2025, where low unemployment, rising wages, and targeted trade deals fueled optimism across sectors. The shift began with U.S. and Israeli strikes on Iranian targets, escalating into full-scale war that has paralyzed key global trade routes. The Strait of Hormuz, a vital artery for oil shipments, is now a flashpoint, with attacks disrupting supplies and pushing crude prices above $80 per barrel. Gas prices at the pump have jumped by double digits in a matter of days, adding immediate pressure to household budgets. Stock markets have tumbled, erasing trillions in value, while businesses brace for higher costs and supply chain snarls. As the dust settles from the initial salvos, the question looms: can Trump's economic playbook withstand the chaos of war? The foundation of Trump's economic surge. To understand the magnitude of this downturn, it's essential to revisit the economic landscape Trump inherited and shaped upon his return to the White House in January 2025. After a contentious election, Trump promised to make America wealthy again through a mix of tax cuts, deregulation, tariffs, and energy independence. By most measures, 2025 delivered on that vision, with real gross domestic product expanding by 2.2% for the year. Solid, if not spectacular, growth that outpaced many pre-election projections. Unemployment hovered around 4.2%, a level economists described as near full employment, while private sector job creation added hundreds of thousands of positions, particularly in manufacturing and construction. Key to this performance were Trump's aggressive trade policies. Tariffs on imports, which averaged 2.4% at the start of his term, climbed to as high as 28% by mid-2025. Pressuring foreign competitors and encouraging domestic investment. Deals like the revamped agreements with Mexico, Canada, and several Asian nations brought in billions in revenue sharing and equity stakes, bolstering U.S. firms. Energy production boomed under relaxed regulations, making the U.S. a net exporter of oil and gas, which helped keep domestic fuel costs stable and contributed to a narrowing trade deficit. Real disposable income rose by 3.1% in the second quarter alone, allowing consumers to spend freely on goods and services. Wall Street reflected this confidence. The S&P 500 climbed steadily, driven by tech innovations in artificial intelligence and a surge in capital goods orders that signaled strong business investment. Inflation, a lingering issue from the prior administration, cooled to around 2.4% by year's end, thanks in part to Trump's negotiations with pharmaceutical companies for lower drug prices and targeted tax refunds that put money back in pockets. Trump often touted these wins in speeches, declaring the economy the strongest in history and crediting his pro-growth agenda for creating a resilient foundation. Yet, even in this period of relative strength, cracks were emerging. Job growth slowed in the latter half of 2025, with hiring concentrated in healthcare and government-related sectors rather than broad-based expansion. Immigration restrictions led to labor shortages in agriculture and construction, pushing wages up, but also inflating costs for businesses. Critics pointed to rising inequality, with benefits accruing more to the top earners through stock gains and corporate tax breaks. Still, the overall narrative was one of recovery and momentum, setting the stage for what many expected to be an even stronger 2026, the spark, escalation into war with Iran. That optimism shattered in late February 2026 when tensions with Iran boiled over. What began as targeted strikes on Iranian proxies in the Middle East escalated into direct U.S. and Israeli military action against Iran itself. The conflict, dubbed Operation Epic Fury by some in the administration, aimed to neutralize Iran's nuclear ambitions and regional influence, but quickly spiraled. Iranian missile and drone attacks targeted shipping in the Strait of Hormuz, halting the flow of roughly 20 million barrels of crude oil per day, about a fifth of global supply. The war's roots trace back to long-standing geopolitical frictions, amplified under Trump's America First doctrine. His administration's hardline stance on Iran, including withdrawing from previous diplomatic frameworks and imposing maximum pressure sanctions, set the stage for confrontation. When intelligence reports alleged Iranian plans to disrupt U.S. allies, Trump authorized preemptive strikes. Iran retaliated by mining the strait and firing on commercial vessels, effectively choking off a critical choke point. Within days, the economic fallout was palpable. Oil prices surged from around $65 to over $82 per barrel, with some analysts predicting $100 if the conflict drags on. Natural gas prices spiked by 40%, exacerbating energy costs worldwide. For the U.S., a net energy exporter, the immediate hit came through higher transportation and manufacturing expenses, which ripple into consumer prices. Immediate economic shockwaves. The war's impact on Trump's economy has been swift and severe. Gas prices rose 11% in the first week alone, averaging over $4 per gallon nationwide, a level not seen since the early 2020s. This energy shock is already stoking inflation, with economists estimating a 1% uptick in the consumer price index if disruptions persist. Food prices, tied to shipping and fuel costs, are expected to follow suit, hitting lower-income families hardest. Financial markets reacted with panic. The Dow Jones Industrial Average dropped 5% in a single session, wiping out $2 trillion in market value as investors fled to safe haven assets like gold and the dollar. Bond yields fell as expectations for Federal Reserve rate cuts grew, but the central bank remains cautious, wary that higher energy prices could embed inflation. Fed Chair Jerome Powell, in a recent statement, noted the risks of a sustained engagement that could delay monetary easing. Job markets, already softening, are showing strain. February's employment report revealed a loss of 92,000 jobs, with downward revisions to prior months. Sectors like transportation and retail, sensitive to fuel costs, are cutting back. Unemployment ticked up to 4.5%, and with war-related uncertainties, hiring freezes are spreading. Small businesses, reliant on stable supply chains, report delays in imports from Asia and Europe, where shipping routes are rerouted around conflict zones, broader ramifications, and expert warnings. Beyond the headlines, the war is reshaping Trump's economic legacy. Projections for 2026 growth, once pegged at 2.4%, have been slashed to as low as 1.2% in a prolonged scenario. Nobel laureate Paul Krugman called the conflict the straw that breaks the camel's back, estimating a $200 billion hit to the U.S. if energy infrastructure is targeted. A report from EY Parthenon warns that a short war might trim growth slightly, but an extended one could have it, dragging on consumer and business confidence. Trade, a cornerstone of Trump's strategy, is unraveling. Tariffs, effective in peacetime, now compound the chaos as allies like India and China face higher costs from disrupted oil flows. The US dollar has strengthened as a haven, but this makes exports pricier, widening the trade gap Trump sought to close. Supply chains for everything from electronics to pharmaceuticals are strained, with potential shortages looming if the strait remains contested. Politically, the crash poses risks for Trump ahead of midterms. Public approval of his handling of the economy, high in 2025, has dipped amid rising pump prices and market volatility. White House officials insist the economy is robust and can weather the storm, pointing to domestic energy reserves as a buffer. Yet, critics argue that the administration's bellicose foreign policy invited this vulnerability, echoing historical patterns where wars boost short-term spending but erode long-term stability. Globally, the effects are amplified. Europe and Asia, more dependent on Middle Eastern oil, face steeper inflation and slower growth. China and India, major importers, see widened trade deficits, potentially shifting alliances as Beijing offers alternative energy infrastructure. The conflict underscores a fracturing world order, where geopolitical risks increasingly dictate economic fates. I will give you a YouTube video transcript. Your task is to rewrite the entire transcript in completely original wording so it is 100% safe from reused or duplicate content detection. Important rules you must follow. Do not shorten the content. Do not summarize. Keep the same structure, flow, and length as the original. Rewrite every sentence in new words, different phrasing, and fresh expressions. Make it sound like a professional news-style narration inspired by calm, serious, analytical tone. Use simple, clear English. No heavy or complex words. Keep it natural, conversational, and confident. Do not copy sentence patterns from the original transcript. It should look like I personally wrote and spoke it, not AI or copied content. The final output must feel like a fresh, original script, suitable for YouTube, fully protected from reuse claims, while delivering the same message as the original. Here is the transcript. Experts urge fiscal prudence, but Trump's team signals more stimulus, including $2,000 checks to offset costs, a move that could balloon the deficit, already at 5.5% of GDP. For now, Americans grapple with the new reality, a booming economy upended by war's unpredictable forces. The coming months will test whether Trump's vision can adapt or if this crash signals a deeper unraveling.